If you have $10,000 to invest right now, you might be thinking, where should I put it? What should I invest in, Jake? Well, that answer is actually fairly simple, but what's more important is to know what not to invest money into. In fact, there are 7 things I want to share today that I would not put $10,000 into, and some of them might even shock you, including something like a savings account or real estate, but I want to tell you why. And then if you stay to the end of the video, I want to show you a simple strategy that could turn that $10,000 into over $200,000 without lifting a finger. It really is that easy, and I'll show you the math and historical data behind it. But first, let's get into the top 7 things I would not do with $10,000 right now. All right, number 1 is invest in cryptocurrency. Now, I'm going to speak slowly and very clearly because I know this can make a lot of people angry, but if you have money to invest, do not buy crypto. And here's what I mean by that. When you're investing in crypto, especially with apps like Robinhood or Coinbase, they give you all of this access to different coins and different things. And what you'll only see if you look up on things like Twitter, or if you go on Instagram, or if you follow any crypto influencers on YouTube, you're going to think that everyone that invests in crypto turns $100 into $1 million. And that's simply not the case. Now listen, there is a chance, a winning the lottery chance of picking the right crypto and turning your $10,000 into a large sum of money. But the problem is that people don't show you is there's also almost that exact same chance, actually a much higher chance, of that large sum of money disappearing very, very quickly after that. Let me show you real world evidence of what this looks like. And I'm going to out myself here, but this is my digital wallet. My digital wallet, as you can see, even just over the last month, I'm down 35% because that's just how crypto is. Now, I have a small amount of money in crypto with a few different wallets, and I like the asset class, but it's a very small percentage of my investment portfolio. But let me zoom out and embarrass myself here for a second. If I go out to the maximum, you're going to see this ginormous mountain back in 2021. Now, I got into crypto because a buddy was showing me it, and I was like, wow, this is game-changing and revolutionary. I didn't know what I was doing. So I put money into coins like Ethereum. There was one called the Graph. I turned $1,000 into like $7,000 real quick. And it kind of blew my mind. I've never been to a casino. I don't gamble. I didn't understand how this worked. Well, guess what? I started to take stuff off Coinbase and put it into my digital wallet and started buying the craziest coins because there was a hype on Twitter and there was a promise of money going up. And look, I made money. So from February of 2021, I started with about $1,400. And you can see by April, I had about $18,000 in there. I more than 10x'd my investment. And in fact, this doesn't show all of the coins. Some have dropped off, but I actually put in a lot more money between multiple wallets and Coinbase. I put in about $13,000. I turned it into about $39,000. Here's what happened in April: a massive, massive dump in the crypto market. And I was in the most volatile coins. Well, guess what those did? They went to almost nothing. So my investment, again, this is just 1,400 of the investment, quickly, within a couple of days, cut in half. And then a couple of weeks went back to where I started. And then I sort of withdrew funds. And so the wallet's going to show a low number. But basically all the money I put in, I made over 20 grand and then I lost it all. I think it was like 28,000 and I lost it all and basically broke even. I know people that ended up losing 90 to almost 100% of their money they put in, and it was a lot higher sums than what I did. So if you have $10,000, you could do what I did. You could potentially make money if you pick the right coin, or you could get in at the wrong time, and like I've done over the last month, lose 35%, $3,500 gone in 1 month. So I would absolutely not put your money into crypto. Now, putting a small portion into something like Bitcoin, I'm a fan of alternative assets, going for, maybe 5% of your portfolio, but please don't just drop your money into crypto and think that you're going to become an overnight millionaire. And for the lucky ones that do, they could still become an overnight millionaire and then an overnight 10,000-aire just a couple of days later. It's just not worth it. All right, number 2, I would not buy real estate. Oh, but Jake, real estate is the most consistent and one of the best asset classes of all time. Abso-freaking-lutely it is. But listen, real estate is not a buy right now in most places, because the problem is $10,000 is not going to get you very far. Now, if you have other investors and you're trying to do commercial real estate, or you're actually building it as a business, not just an investment, then you could start to pursue that, maybe starting with $10,000. But 10 grand isn't going to get you far. Even with a 3.5% down plan, you're going to buy a house that is going to require a lot of upkeep, maintenance, and there's so many more upfront costs that $10,000 won't even get you past the down payment, let alone the closing table. So buying real estate with $10,000 can be done, but only if you're literally treating it like a business, and you're going to end up putting a lot more money, whether it's borrowed money or your own, to turn this into a business. But as an investment, don't spend $10,000 and think you're going to buy a property and then you're just passively going to collect rent checks and everything's going to be amazing. That is not how it works. You treat it like a business. You are running it part-time or even potentially full-time to whether you flip a house or to build equity into something and turn it over to rent it. This can be done, but if you just want an investment, don't just say, I'm going to buy real estate. That is absolutely not realistic with only $10,000. I know somebody that does multifamily real estate. I know somebody that has done single family real estate, and they say have $50,000 in the bank. $10,000 is barely a portion of your emergency fund for running a real estate portfolio. So it's not going to get you very far. All right, number 3, do not go invest in stocks. And what I mean by that is don't go and buy single stocks. Delete the Robinhood app from your phone because it is not helpful. It's trying to gamify investing, but it's not investing. You're actively trading, trying to meet the market. And most of the time, this does not work. In fact, there's a study that shows that over a 20-year period, 94% of professional fund managers, investors cannot beat the market, let alone you. So don't think that you're going to buy a single stock and get rich. Again, ignore the hype train, the YouTube channels, the Instagrammers, the people that are trying to show you shortcuts to build wealth through active trading. That's just not the case. And a lot of times those guys are using leverage, which is way more risky, and you need way more than $10,000 to get started with that. So don't go think you're going to pick the next Apple or Amazon or Microsoft. That's just historically not the case. And you're taking on a high amount of risk on something that maybe you think might outperform the market. It's just not worth the risk of losing your money versus building wealth long term. So don't trade single stocks. The data is not in your favor. History is not in your favor. And you are not smarter than the supercomputers and AI and algorithms that are trading against you to try to beat you. So I do not recommend investing in single stocks. Again, outside of that, small, teeny portion, 5% of your asset allocation. All right, this is going to be controversial, but I don't care. Number 4 is don't put $10,000 into a high yield savings account. What do I mean by a high yield savings account? What that is a savings account that pays higher interest. Nowadays, because the Fed has raised interest rates, you could get upwards of 4% APY. I actually have a whole video up here. I'll link it where you can check out places to put money. I think a high yield savings account is a good idea for emergency savings. But if you have $10,000 to invest, putting money in a high yield savings account is not an investment. I repeat, putting money in a high yield savings account is not an investment. It is there for emergencies and short-term savings only. When you are a long-term investor, putting money into a high yield savings account is going to underperform the market. In fact, it'll barely keep up with inflation. And as the Fed continues to lower rates, your high yield savings account is going to go down in value. So you're not going to see 4% forever. By the end of this year, you're probably going to be in the 3s, and it might settle around there, but 3% is going to be less than inflation or equal to it. So you're losing purchasing power while losing the compounding effect of investing by putting too much money into a high yield savings account. I just don't recommend it for investors. Park your emergency cash there, invest your money elsewhere. All right, number 5, I just wouldn't spend the money on a quote investment in yourself by taking your trip or going to have an experience or anything like that. Now, that might sound crazy coming from the guy that sold his house and traveled the country for 2 years and blew over $100,000 just enjoying life with my family. But listen, I only did that from a place of having my future self set up. I took care of my baseline investments. My future is secure. And then I was able to go spend that money. If this is your first $10,000 and you want to invest it in the market, it's a good idea to lock that money away. Don't have it accessible. Don't blow it on an experience. Like maybe you just got your first big boy job and you're like, man, I got a commission check or I've got $10,000 in the bank and I want to do something fun with it. I think it's a wise decision to have some fun, but take 10% of that money. Take $1,000 and go have some fun, but invest the rest. Lock your money away first. Secure your future bag, and then you can take care of yourself in the now for the rest of your career. But don't just blow that money because YOLO. Like And listen, this is coming from the YOLO king. I quit my job at 32. I sold everything. We lived off of our home equity, and we traveled around the country for 2.5 years. I had almost no income during that time. Like, I get it, but I spent a decade building my financial foundation first. So if this is your first $10,000, talk to me when you have your first $100,000 or $200,000 invested. Then you can consider taking that once in a lifetime trip. All right, listen, if you have $10,000, I'm going to let you on a little secret. Don't buy gold. Don't buy gold. Don't convert your IRA to gold. Don't invest in gold bullion and gold coins, and don't think gold is going to save you. Listen, if you zoom out historically, gold has a pretty poor track record. It's just over 5% returns, which is a little bit better than your high yield savings account. And yes, in uncertain times, gold has outperformed. And more recently, it has done a little bit better, but don't expect it to outperform the stock market, and it'll barely outperform bonds. In your high yield savings account, it'll barely outperform real estate, and it's way more volatile. So gold, though it feels like, oh, it's been around forever and it's been treated as a currency for thousands of years and it's always going to be there, and if the entire financial system collapses, I'll have my gold. Like, no, like that's not happening. I'm sorry. If you want gold, go buy Bitcoin. At least that's digital gold. It's modern. Listen, gold barely has a place in anyone's portfolio if you are a serious investor for financial independence and early retirement. It just doesn't. It does not make sense. Again, go look at the history of gold, look at the returns. It's not a great long-term investment, and it will definitely underperform the market, which over a long period of time could add up to hundreds of thousands of dollars difference. So don't put $10,000 into gold right now. Just don't do it. All right, listen. And the last thing I would not put my money into, if I had $10,000 right now and it was sitting here ready to be deployed, I wouldn't go buy a car. Like, don't upgrade your car. This is, again, if this is your first big boy, big girl job and you got an extra $10,000 and you're feeling rich, don't buy a car. Cars are like a death trap for your finances. Listen, here's what a car does. A car allows you to buy something at a price and then sell it 5 years later for less than half that price. At the same time, if you're just putting $10,000 and you buy a $30,000 car, now you have a $20,000 car note. So now you're paying interest on a depreciating asset. It's a double loss. Not to mention the maintenance and the car insurance. And by the way, if you have a car payment, your car insurance, you have to get the premium car insurance. Like, it's the most expensive wealth trap that's out there, and it is not worth your $10,000. Like, you're going to light that $10,000 on fire. It's going to turn into $4,000 in 5 years when it could have grown in the market and turned into $16,000 to $17,000, right? So the car, I get it. And if you don't have a reliable car, of course, you need a means of transportation to get to your work to make that money. I totally get that. But if you already have a working vehicle, do not put $10,000 to upgrade your vehicle. It just doesn't make financial sense. Again, set your financial foundation first, and then use those assets and all that growth to pay for your fun things later if you want to upgrade your car. All right, so I promised at the beginning of this video I would show you the easiest thing to do with $10,000, where you can just put the money in, forget about it, and let it do its thing. It can grow to over $200,000. What I would do with $10,000 right now is simply invest in an S&P 500 index fund and forget about it. That's it. So the S&P 500 is a collection of the top 500 companies in the US, you know, the Amazons, the Apples, the Teslas, Nvidias, Oracle, all of those massive companies, and you're buying a little bit of each of them, and it's spread across. So the bigger companies, you get a bigger share of those companies. The smaller companies, you get a smaller share. And the cool thing about this index fund is it's just invested in those companies, and as they grow, you make more money. And if the ones at the bottom, you know, end up failing or dropping off, they'll just bring a new one in. It's self-cleansing. And there's almost no fees. Mutual funds could charge up to 1% fee. They underperform index funds. An index fund could charge you 0.03% fees, which is what Vanguard does, and it outperforms almost everything. Now, you might think, oh, dude, Jake, 10% returns suck. That's so boring. But listen, you could turn $10,000 into a lot more by just putting it in an index fund and forgetting about it. Here's what I mean by that. This is the stock market returns, the historical returns over the last 100 years. But if we just want to look at the last 30 from 94 to 2024, let's say you put that $10,000 into the S&P 500. Here's what it does. Your money sits there. It compounds at over 10% per year, right? Boring returns. And you just turned $10,000 into $225,459.08 in 30 years. And you know what you did? You made one transaction, you forgot about it, and you let it do its thing. You let the biggest companies in the world that hire tens of millions of people go to work for you every single day to make you rich. You have very low risk because it's diversified immediately. You pay very low fees and you just don't have to think about it. You're basically betting on the US economy. Boom. The next 30 years, you could build wealth and not risk it all in single stocks and crypto and high maintenance real estate. It's just not worth your time. It's not worth the cost. So that's it. I mean, that's literally the whole secret, is to buy an index fund and chill. That's it. So that's what I would do with $10,000. And if you want to learn the math behind how index fund investing could allow you to do something like I did to get to the point where you never have to invest again and you could take a couple of years off with your family, check out this video that I made right here all about the financial independence strategy that I used to do these exact things.